Navigating Bubbles with Systems Thinking. This is Bill Scheid from Applied Finance Research, and I want to start this video by giving a shout out to the SmartSignal System newsletter. This video was sparked by a recent edition of the SmartSignal System newsletter, which was created by RJ Hixson, who is the former VP of the Tharp Institute. The newsletter uses signals from a proprietary monthly system that I developed specifically for them, and you can learn more about them at their website here at the top of the screen. They recently pointed to an interview with veteran investor Jeremy Grantham. If you haven't heard of him, he was the CEO of GMO LLC asset management firm, and at one time had as much as 118 billion in assets under management. Recently, he was in an interview that you can find on YouTube called How to Predict a Stock Market Bubble. And in that interview, he said that we are in a bubble now. And one of the things that he points to is that stocks are at their highest valuation in history. Yes, in history. I just want to point that out in case you missed that point. The last four peaks, which were not as high as where we are currently, were 1929, 1972, 2000, and 2007. So I think if we asked ourselves, would we rather be getting in or getting out of the markets during those years, I think all of us would probably say we would rather be getting out. Now, Grantham did clarify that his concern is not for the short term. He said that he's sometimes early and that's frustrated his investors in the past, but he did make the point that a lot of investors may look back in a few years and wish that they'd moved to cash now. So that brings us to the next topic. Why is systems thinking an edge in navigating bubbles? Well, as RJ Hixson pointed out in the newsletter, systems operate systematically. So when you have a well-built system, it's robust, it's adaptive, and it operates on a long-term statistical edge. That means it doesn't rely on prediction. Instead, it's a disciplined decision-making framework that allows us to respond to evolving market conditions now. Another really critical component is that systems remove emotional decision-making. If you've ever traded or been an investor during a market crisis, you know that there's tons of media noise, there's panic in the air, the emotions are running high, and making emotional decisions in the markets, as we know, can be fatal to our accounts. The other thing that systems do is they reduce cognitive load. If we have a disciplined and statistics-based decision-making framework, we reduce the cognitive load, which in my view is actually one of the big hidden costs in trading and investing. The other thing that systems do is they help us eliminate the need to time tops and bottoms. As we said before, they give us a way to respond to evolving conditions based on current market data. And so systems can really excel at playing defense or moving to cash to avoid major bears, and then rotating back into the market to compound those gains that we've preserved. Now, as an example of the power of systems thinking during market crises, here's the performance of 5 of our monthly asset allocation systems as compared to the S&P 500 and 60/40 buy and hold during the 2008 financial crisis. Specifically, this covers the beginning of 2008 to the end of 2009. Now, in these numbers, you're going to notice some pretty astounding facts. First of all, while the S&P had a maximum drawdown of almost 50% during this period and finished down 20%, every single one of these systems made money. None made less than 15%, and some made as much as 53%. Also, all 5 systems had drawdowns that were less than half of the S&P, and 2 of them had drawdowns in the single digits. And I think what's really powerful is if you look at the bottom line of the table, you'll see what a dollar difference systems thinking makes. Systems thinking means that our hypothetical $100,000 account doesn't drop to $79,000. Instead, it grows to as much as $153,000. Which one would you prefer? So the point is this: systems thinking is a powerful edge when it comes to navigating bubbles. The contrast between investors who use it and investors who don't is stark and clear. So if Jeremy Grantham is right and we are in a bubble, the real question is, will you be positioned to turn crisis into opportunity, or will you follow the herd as the market plunges into chaos? This is Bill Scheid from Applied Finance Research. Thank you very much for watching, and happy investing.